What's going on, guys? It's GBP baby. Welcome to another video. Today I am going to be covering a trading strategy. This is my first video going straight over the trading strategy, and it is off the basis. This trading strategy, there does need to be a certain setup involved. But today is a Tuesday, so we anticipate the high or low of the week to get made. I was anticipating yesterday's highs to get ran. That's what we saw happen here, and then I managed to get in during London, and now we've been falling for the rest of the day with an expectation for the rest of the week to reach into Southside liquidity from last week Friday, last week Thursday, and potentially last week Wednesday. Now, in order to understand how to get in on this trading strategy, and obviously we haven't delivered yet, we haven't finished delivering, but in order to understand it, you really need to understand the sessions and you need to understand the buyers. If you go and watch yesterday's video and my weekly review, I explained that I wanted to see price this week trade up into this daily breaker, and then I wanted to see a reaction lower because we're bearish on pairs and then we're bullish on dollar. So I'm going to go to the 5-minute chart and I'm going to just run through how I managed to get in on this Tuesday and get in on such a nice move. So first, what I always do, and I do this in my backtesting videos as well, there's countless of those for you to go check out. I mark out the low of the Asian session, so the low from 7 p.m. to 12 midnight, and then the high of the Asian session. And then what I also delineate is the midpoint of the Asian session. And what you find is that price treats the Asian range, so this low to this high, price will treat it as a buffer in the new day. So you see we open, we trade higher, we run out the stops from yesterday, so that means buy side liquidity is tagged. Remember, we are bearish, so any kind of rally is we assume is a false rally. We rally to the top of this blue box. What is this blue box? This is that daily breaker. I'll just show you that again. So we have a daily breaker here. Why is this a breaker? We have a high, we have a low, we have a higher high, and then price closed lower here. So that makes this last down close candle a breaker. So that's why we can treat it as such. But let's get that back down to the 5-minute. And you'll see that we climb right to the top of that daily breaker, and then you'll see a nice break in market structure right here. Now this is where, as soon as you see this break in market structure, this is where you need to start looking, okay, how feasible is a continuation to the downside? Well, we've started the London session. We have a breaker here, high, low, higher, high. So we look at this last down close candle, and what you want to do is you want to drag that out. What I'm going to do is I'm going to hide this real quick, just so that we can see. So you look at this last down close candle, and you want to pull that out like so. Let me just make that a light blue. Ooh. Like so. Now this is the breaker block, and you want to see how price is treating the breaker block. Are we respecting the 50% level? And as you can see, price is. Now, although we're wicking above it, we can allow for the wicks, but volume remains below that 50% level. So we can start looking for shorts within this and put our stop loss above here. So this is where I entered. As soon as we traded back into this breaker, I entered a sell position right here. Now, obviously, this is obviously this is hindsight, but this is what you need to learn to do, and you can only practice this through backtesting. And I have countless backtesting videos here. Anyway, I put my short position here, and I put my stop loss above this high. Remember, we've just reached the high off the breaker. We're expecting lower prices. We've taken out buy side liquidity from yesterday's highs, and we've had a break in market structure here. So any pullback into this range, we can be selling into. So I went short here, and then I also always delineate the 3 a.m. candle, and that's because after 3 a.m. there's either a slight retracement or continuation to the downside. So this is 3 a.m. and what do we have? That retracement closing in that breaker, and then we trade away from it. We then come up one more time, run these stops slight run on stops before continuing lower. Now here's where the Asian range becomes interesting, because as soon as we enter this Asian range, look how price starts to touch the high of it. It's starting to find resistance at this level. So once we got into this Asian range, again, I was looking how are we stepping through this Asian range. We have the 50% of the Asian range here, and look how price slices through it. It doesn't just fall, slowly through it. It slices through it aggressively whilst running out these stops. And as soon as it done this, so as soon as this low got taken out, as soon as we traded through there, I was happy to move my stop loss from above this high now to the Asian range high, because we're now below that 50% level. Price shouldn't need to come back up there, and we've seen clear resistance at this level. Furthermore, stops have actually been taken. If you look at this high, how that took out that swing high here, it's very specific, but the fact that this high took out this swing high, that's enough for me to say, okay, I can position my stop loss above here now. Anyway, so price has moved lower, and then eventually we come to the low of the Asian range. Now look where we retrace back into right as the New York session starts. Now again, this is all through backtesting that I'm able to anticipate certain moves. For example, beginning of New York, 7 a.m. till 8:30, I always anticipate some kind of retracement or again continuation. From 7 a.m. to 8:30, there can be a retracement, and as you can see, what do we witness? We see a nice retracement, and where do we retrace to? 50% off that Asian range. So you're starting to see now how that Asian range is acting as a buffer zone. We also have this significant swing low. We can look at the order block at that swing low, which is a bullish order block. I hope you guys are staying with me, and you can drag that out. And look again, 50% level of that, volume respects it, and then we break away. And start falling out of the bed at 8:30. So if we wanted to enter again, say we wanted to trade the Asian session, we could have entered here as well. So what I'd simply do I'd be waiting for some kind of break. This is a nice break. This down candle took out these lows nicely, closed lower as well. Retracement back into this range. We can sell on that. And where would our stop loss be? Well, like I said, it'd be above the Asian range high because we don't anticipate price want to go there because we have a bearish bias. Then as you can see, we're still obviously trading lower, but price has since been falling, ran out these stops, and we've just taken out yesterday's low. So the next target will be Friday's low and then Thursday's low. And it looks like, to be honest, I am anticipating it to continue into the London close, us to continue lower. But I just wanted to show you that trading strategy because that is how I'm able to get in on these moves. It's not, obviously it's easier said than done, but if you go and watch my daily reviews, so if you watch yesterday's daily review or my weekly review, which will be even better for you, if you go and watch that now, you will understand exactly how I managed to get in so confidently and smoothly on this move. It's because I had a goal, I had a target, I had an understanding of what to expect, and it played into it, so I was comfortable to enter the trades. I hope you found this insightful. Drop any comments below, I'll definitely respond, and I'll catch you in the daily review. Peace.